Welcome to Banking to Go by Algebra Labs. Your takeaway insights from the world of financial technology and banking. Served by today's industry leaders. My name is Nizam Uddin, your host for today's episode, where we delve into the future of storytelling and consumer engagement with Yusuf Omar, co-founder and CEO of Scene TV.
Yusuf Omar, welcome. You've come straight from the airport.
Thank you. It's good to be here.
From your plane. You came from where? Because I don't know where you are half the time.
I was in South Africa last, came in here via Doha.
Brilliant. Well, Yusuf, former CNN journalist turned media company founder. You've turned your passion for storytelling and cutting edge tech,
which is right in front of us, into a remarkable career. You are one half of the driving force behind media platform Scene TV, which uses augmented reality and AI to help enable people to tell their stories. And you are revolutionizing the world of storytelling. Is that fair?
Yeah, exactly. I mean, I think we've seen the decentralization of so many industries, right? Like we're seeing it with crypto around the banking system. It's decentralized. And we're doing it in the context of media, right? For the longest of time, if you wanted to tell a story that was broadcast to the world, you had to have certain infrastructure. You had to have a satellite and big cameras and big budgets. And you're probably in a big tower in New York or London. And the mobile phone has completely shifted that. It has enabled anyone, anywhere around the world to tell their story and be seen by millions or billions of people. But we realized that a lot of the most marginalized communities don't actually know how to tell their story, right? So even if they have a 4K camera sitting in their pocket, it's like a Ferrari, but they're driving it in first gear. And if you can give them tools to help them unlock that device, it's amazing what results you see.
I love the way you described it, because part of this conversation is parlaying that into the world of financial services. Mm-hmm. And the future of banking is really what we as a Banking to Go podcast are looking at. And I think there is huge synergy between how stories are told, how consumers tell their stories, how they receive their stories, and how you engage in the financial system. And so what I want to unpack today, because it's going to feel odd to some people who'll be like, you're doing a Banking to Go podcast, and then you have a media platform on there. And so on one level, you've described decentralized storytelling and decentralized finance, which I think is accurate. And I think we have digital assets, future of finance in terms of crypto. That's one element. But just before there, you also now have a digitizing of banking. So the mobile phone is at the heart of that, right? And so when you're building a neobank, a digital bank in this day and age, actually at the heart of it is your phone, where you don't need a branch anymore. Everything happens on the phone. But before we delve into that, I want to get a sense from you. You've been in the space for a while now. In the last 5 years, tell us how storytelling has shifted. How are consumers receiving information? And paint that picture from a tech perspective in particular.
Yeah, I mean, I think the biggest shift that we're seeing, and TikTok has led to this, and Snapchat has led to this, is that user-generated content is outperforming every other vertical and format of media, right? You can spend $500 million on a Hollywood production and you'll find some kid at home in their underwear creating something on their mobile phone, which is going to reach more people over the next 24 hours. And I think that speaks to a point that people are craving real, raw, authentic stories, right? They want to hear, and it's also just like unlocked human potential, where we previously would have had a group of writers who thought that they were funny in Hollywood. It's actually like, hey, actually now Kabi or like this little kid is significantly funnier than you are. And we're able to unlock that. I think the other major media trend that we're seeing is, that old Andy Warhol saying everyone will have their 5 minutes of fame. That's really happening right now.
Yeah.
It's no longer about one publisher having 100 million followers. It's about having these really small targeted media organizations that target specific interests of yours. So Niz, I know you enjoy running. You don't need to follow a running publication for the whole world. In fact, you probably need a running publication that's relevant to the part of London that you're in right now. And it's the same for advertisers and marketers. Nike no longer need to have this like massive reach. They can partner with a local media company and a local influencer running a local running club in a specific area. So that's where media gets a lot more niche, a lot more targeted. I would say in the context of like banks have always been involved in storytelling from the very beginning. Like what was a bank back in our parents' days other than like going to them and telling them a story? And you'd literally, shake hands and sit down with your bank manager and say, hey, I need a loan to get a mortgage to buy my house, or I've got this really good idea for this chicken tikka shop that I want to run, but I just need a bit of like early capital in. And you'd tell a story and they'd listen to that story and they'd say, okay, does this person look credible? Do they have a good track record? Is it somebody who we can trust that's going to see the course of this business through? And in some ways, like, unfortunately, perhaps, that banking relationship now has moved to like an online form or a survey or like some call center where you don't have that human connection anymore with that bank manager. But I think potentially this is going to shift to like your social following. I think banks may start to look at a business in terms of like, well, how much credibility do they have? What testimonials are we seeing from their audience, from their customers? What reputation do they have online? Have they got the ability to gain attention? Have they got a lot of people following them? Are people watching their content? Okay, if they've got a lot of eyeballs on them, then this is an interesting business, so maybe we should get involved.
So I want to touch on that because I think it's a really interesting concept there where you've described now where when banks or digital banks or the future of banking think about how we legitimize an individual. As you said, beforehand, it's a conversation in person, energy, you have some history, you have reference points, referees even from employers, etc. Going forward, we'll have new data points for sure. And we've started seeing that already, right? So now you have, if you open a bank account, you can do it in 3 minutes, 2 minutes in London right now and in other parts of the world. You have companies, intermediaries that exist that do your AML, KYC checks, etc., etc. What you're describing is a future where actually you'll go beyond that, where you'll have other data points. So your social clout. I mean, I've seen a Black Mirror episode of this, right? Where you go and your social class points go up and go down.
Yeah.
Very scary, very dangerous. Now, before we get there, tell us, you've got a pair of glasses in front of you, like AR. I want you to break down this augmented reality piece, because I think from a more, before we jump there, I think there's a really interesting bit in between where, I'm wearing wearables right now, right?
Yeah.
Like I have my Whoop and I have my Garmin, it tracks my data, I can pay. There's an interface here. Right now, you can't pay using AR, can you?
Yeah, we're very close. So there is a massive technological shift that's about to take place that is going to change humanity in such a significant way, and I don't think any industry is ready for it yet. At the moment, we're all very focused on AI, and rightfully so, right? AI is transforming many industries. But AI is almost like the back end of the internet. It doesn't actually fundamentally change the way we operate with the internet. We're still on our phones, we're still on our laptops, we still type around. So basically for Web 2, the web as we know it, it's been predominantly QWERTY keyboard as the interface.
Yeah.
We search something on Google to access it. We search something on YouTube. We search something even on Google Maps so I could find this location. That sucks. Like the typing and the QWERTY keyboard as an interface to technology is actually not the fastest way that we can engage. We can try voice, and some people do use voice. But what we saw during COVID was we saw an acceleration of the camera becoming a primary input to technology. We started to see where you'd go to a venue and they didn't want to give you a menu, so you'd scan a QR code. And we had QR codes for a very long time, but for whatever reason, that adoption hadn't quite taken place. In fact, just before I got here, I went and had breakfast at a place called Dishoom's just around the corner. And they didn't give me a printout receipt when I wanted to pay my bill. They just gave me a QR code, scanned the QR code, used Apple Pay. What was interesting there was I used my mobile camera to access the receipt, to access the payment, and then I used my front-facing mobile camera to unlock my Apple Pay. So this is now entirely camera-based interface.
Which most people don't think about, right? Like we don't actually think that it's the camera. You think it's your phone, but it's actually not the entirety of the phone. It's the camera lens.
Right, and the camera is so much faster than typing or even speaking, right? Because how do we actually as humans interact with the world? With cameras. Our eyes are effectively a camera. They're our primary data input of what's happening around us. So where is all this heading? Every major company in the world, whether it is Microsoft, whether it's Snapchat with these ones, whether it's Apple with Vision Pro, Google Glass, they are all making significant investments in wearable headsets. And wearable headsets rely entirely on cameras. They have cameras that help them understand the world around them, and then they have screens, like I have a screen in front of me that helps me process that information. So we're gonna move by 2030, which is not even that far away, 5 years away from now. We're gonna move to a world where the average person is gonna be wearing some form of computation on their face. They're gonna be interacting with information here. And I know what you're thinking, oh my God, this sounds awful, like it sounds like a casino on your face. I think mobile phones are awful. When I'm walking around London, I'm like this. I'm not seeing anything. Or if I want to take a picture of the big bed, I'm like this. I'm removed from the world. I think wearable technology at its best, if it's subtle, useful information when you need it most, is incredibly beneficial. It actually makes us more present again. We're more in reality. So in the context of like banks and payments, this changes everything, right from the retail experience. It has the ability to look at this mug and say, oh, cool, that's an interesting mug. Give me information, what's it made of, where it's made, is it sustainably made? Show me my stuff at home and tell me, does it fit in with the rest of my cupboard?
And do I have the money in my bank account to pay for it?
Do I have the money in my bank account to pay for it? And then at that point, I could literally just look at it and have it, right? I could get it ordered, it'll get shipped to my house. With AI, it knows your payment details, it knows your address. Imagine walking around London and, I eat halal food. Being able to say, yo, there's a really cool halal place around the corner. Oh, and then Jummah's coming up. You can head over to the mosque over there. And being able to navigate your city in that way is potentially incredibly liberating. And then being able to pay for things just by looking at them, we are right around the corner from that. And it's incredibly exciting.
That is a vision of a future that's exciting, but also, I say it's scary. It's actually not scary because we're almost pretty much there. The interesting part for me here is, we hear about AI all the time. The threats of AI. You've described, augmented reality as the way forward. And when I think about how consumers are going to behave, I'm now asking the question, how will banks respond, right? So like right now you have, like you said, we are just moving from almost like legacy system banks, which is code for high street banks, to now digital-only banks. And the cameras are a really important role. So there's a number of companies out there that do KYC online. So right now, most people who open up digital banks will have the system where they have the camera and they do this and they do that. And they say 1, 2, 3. That's camera tech. That is at the heart of your security apparatus. So we're already there.
Yes.
Right? Now, what I'm thinking about is when we move to wearables.
Yeah.
I'm thinking from a banking perspective, what are the concerns, risks that you think banks are thinking about as to, because this is what banks do, banks are thinking about risk to money and challenge, right? Like, what are the risks right now? Because you're on the front line in other industries. What are the risks that other industries are thinking about that maybe the finance sector should be thinking about in terms of this is how you start preparing for adopting wearable technology from a consumer standpoint? This is what it looks like. So, you're connected to the internet. How hackable is that, for example? What should the industry be thinking about before we start adopting this kind of tech?
Yeah, I think when we move to a camera-first world, and especially when we start putting cameras onto our faces, that is arguably the most precious and private data on Earth. Right? Because that is not just what is capturing, if you're wearing these to the bathroom, but it's also capturing the conversations that you're having with loved ones, the fights that you're having with a spouse. So I think consumers are going to make really tough decisions on who they trust to have hardware on their face. Do consumers trust Meta? I'm not sure the answer to that. Do they trust Google? I don't know the answer to that. And I think that's why you're seeing companies like Apple, like Snapchat, through their storytelling, through their marketing, place so much of an emphasis on user privacy, looking after your data, and increasingly keeping as much of that compute on device as possible. People are very wary of anything being transmitted over the cloud. So I think these are some of the considerations that people are going to have. And I think banks are going to have to also think, okay, what parts of our process are going to be administered on the cloud and which parts of it are going to be administered locally? That's at least the initial concerns.
And what you've said there rings really true to what we're seeing around the world, where you have now data laws emerging in parts of the world where they say the customer's data that you have of our citizens in this country can no longer be anywhere else. They have to physically be here. And we're seeing that in parts of the world. You have a really beautiful, eclectic life journey. Born in London, South African, lived in India, lived in Australia. I'd love to get a sense from you, because again, when we talk about the banking journey, often we think about it, sadly, in a Western-centric way, right? So big banks to digital banks. Actually, in Africa, where a lot of people don't have bank accounts, they skipped that whole big bank part.
Yeah.
They went straight to banking on the app.
We see these huge leapfrogs. I think if bankers from the Western world had the opportunity to travel, especially to East Africa and parts of Southeast Asia, they would be humbled by the advancements that are taking place. I traveled to Kenya. I hitchhiked in 2010 from South Africa to Syria. So I went up the whole east coast of Africa. In 2010, you could pay for a minibus taxi with your phone at a time when I couldn't do that in New York City. What a wild idea that I could use mobile banking in Kenya before I could in the United States in an easy way, because they had rolled out M-Pesa. In South Africa, I was recently doing a project with Coinbase. We were looking at how blockchain technology is improving lives around the world. We traveled to a township, which is like an informal settlement in South Africa. As you might know, the vast majority of South Africans, black South Africans, were robbed of their land in 1913 through the Native Land Act. And today, you have a native population that are squatting on their land. That means that they don't have physical addresses. They don't have title deeds to the homes that they live on. They literally are living illegally. That system makes it 30 years after democracy impossible for some 30% of the population to have a bank account, right? A massive market are unable to be banked. That means they carry a lot of cash, they get robbed, it's incredibly dangerous. Again, they can't get access to like loan finances and these kinds of opportunities. We went to this community, a township community, that are their first interaction with banking is Bitcoin accounts.
Oh, wow. Yeah.
Which they interact with through SMS. They don't even need an internet connection. So we're seeing whether it's Kenya with M-Pesa and mobile banking, whether it's South Africa and people getting Bitcoin wallets through SMS technology, we're seeing these radical disruptions as a necessity to historical injustices. But so much of that infrastructure and ideation could apply to Western markets for sure.
And I think you used the word humbling is correct. I think if we saw how quickly some of these communities are adopting the new tech that a lot of more established nations who are first movers are finding more difficult, I think it is very humbling. You shared something just off camera, which I thought was really interesting, which is how the big banks in South Africa are now focused on individuals in terms of their stories.
Seeing it so much.
Unpack that for us, yeah.
I'm seeing across Southern Africa with insurance companies and with banks, their entire narrative has moved to your story matters. We want to listen to you. I think previously a lot of these markets were seen as high risk, which is why, for example, I traveled to Mozambique recently where interest rates are as high as 30%, right? Like incredibly high. And that means that the majority of the population can't buy their first home. But when you start to unpack their lived experiences, their stories, people start to see the potential. And that's why we're seeing amazing blockchain initiatives now where people from Western Europe are able to fractionalize loans for communities in East Africa. Yeah. But storytelling is at the center of it. I'm seeing all the banks across Southern Africa drive this narrative that your story matters. We want to hear your story. We want to hear your narrative. And they're celebrating success stories too. We're finding that the banks are telling stories about young Black businesses in the most difficult of circumstances that have made it despite the odds. And there's some beautiful businesses. There was one about like this community in Tembisa in South Africa who had a problem with rats.
Yeah.
And so that because basically garbage wasn't being collected on a regular basis. So they started collecting these rats, skinning them and making like earrings and jewelry and all this kind of stuff. But like, imagine being the financial service provider that heard that pitch and said, oh yeah, I'm willing to put $10,000 forward for this. I think there's an idea there. And whoever cracks how to connect those local businesses and services to international markets, I think are going to find a real success story.
Wow. You, going back a step, wearables. How should, again, if we're thinking about the future of bank builders, right? Mm-hmm. And it's funny, the way you described wearables as the connector between, let's say, the online and off. If AI is on the back end, yeah. Machine learning is on the back end, quantum is on the back end. Wearables really are the interface between the online and the digital.
Exactly.
Like truly,
it's the user
right?
interface.
Now,
It overlays digital onto the world.
Now, if I think about, my CTO is going to be really proud of me, right? Like when I think about the orchestration layer of our tech stack, right? So every digital bank, anything digital tech-wise will have a tech stack. And there's always an orchestration layer, which to a Luddite like me is when you take really complex information and you try and simplify it in terms of an output, right? Input complex, output simple. And that's how I see wearables. I see complex information of that online and connecting into often, quite complex, but more simple information offline. Now, if you're a bank and you're thinking about the future of digital banking, which we do as we build digital banks around the world, and we start thinking, okay, where do wearables fit in? What advice would you give to CTOs and to others who are working within a digital bank about how you make a wearable experience really nice and enjoyable and seamless for the end user? Because actually, whether it's storytelling or whether it's financial experience services, can be very similar in terms of the output, right? Like, what advice would you give us?
Every single billion-dollar business that exists today, Uber, Amazon, Airbnb, there will be an equivalent Web3 product and service built around wearables. So that's the first point. Banks are increasingly a bank slash something. They're a bank slash media company. They're a bank slash community builders. Work out what your slashes are and start developing products in that space. Nobody's built the Uber so that I can literally just look where I am and the Uber arrives where I am, right? Nobody's built the Yelp where I can just look around and see all the nice restaurants that I could be frequenting. So I think banks that are already thinking about their intersectionality with other industries and starting to have value add into those spaces, what is that value add? Because trust me, there is no app store there right now. I recently got the Vision Pro, right? It's the Apple headset. It's several $1,000s.
Yeah.
It's an amazing piece of hardware. It doesn't have enough apps. There's not enough of that ecosystem. So much capability to build out into that ecosystem.
You have a lot of, and we've known each other for a long time, you have a lot of faith in this tech being the next iteration of the future.
Yeah.
What gives you that? What gives you that hope?
Friction. The current way that we engage with the internet has just got so much friction. There's a reason why we can't drive and use our phone, because it's prohibitively dangerous. We can only do one thing at a time. It annoys me the idea that I'm walking around the city, navigating, looking down at a screen. It annoys me the idea that when my son was born, I was looking at that occasion through this black mirror, through this mobile device. Mobile phones have robbed us of an entire generation. We see our kids becoming zombies to these iPads. Humans will always go to an interaction with technology that has less friction, that is quicker, easier, less evasive, really. In answer to your previous question on what banks and CTOs should be doing, they should be thinking about the most discreet banking experience. Don't overwhelm the user. Don't build a casino on the face. If I am right and the future is moving in this direction, don't give me bells and whistles and show me all of my notifications and tell me that I've reached my new rewards program. And that sounds like a lot. Who wants that future? Be discreet, be subtle, make your UI almost disappear. Allow me to enjoy the world and make my banking as delicate as possible. Just do things in the background. Give me useful information.
I love that. And you said something which was really important earlier, which is trust, right? Like the importance of trust, especially if you're putting something on your face.
Yeah.
Much like banking, this is so intimate, so personal. Like my money is very personal. My face is very personal.
Yeah.
Why would I put your thing on my face? In the same way, why would I use you as my bank historically? Now, it's interesting of what we're seeing now. I mean, and I'm talking from a UK context here, where previously you've had generations of banks, which often were why we had financial crises. But because that's all we knew, it's almost like this really difficult relationship that you have, where I know you did wrong, but I don't trust anybody else, so therefore I'm coming back to you. Now, finally, we're moving away from that because you've got now 5-10 years of neobanks that have come in, that
built
have
trust.
emerged, that have built trust, right? And I can see a similar thing happening from a wearable perspective, where you'll have a need and a period to build trust, right? And so, interesting, if you go to young people anywhere in the UK now, and you say, who's your main bank? Almost certainly they'll be like, a neobank.
Yep.
Go to anybody above 35, 40. Who's your main bank? they'll say a traditional bank. And that friction is
generational split.
It's a huge generational split. And so how do we build trust in terms of
So I think
the
there's
wearables?
like amazing intersectionality between wearables and AI. They have to come together, right? The wearables is the hardware side of things that changes us from our mobile phone to this being the new interaction with technology. The AI is the bit that gives us a richer experience with the internet. I think your bank effectively will over time become your financial life caddy. It'll be this ever-present AI that is overlaid onto the world that is just guiding you through your consumer choices and other decisions, right? And I think that relationship and the bank's ability to consistently understand me, understand my values, understand my consumer interests, understand the kinds of brands I should and I would and wouldn't support, the kinds of establishments I would and wouldn't visit, that will gain a level of trust. To the extent where I start to say, hey, actually, I trust you to help me navigate this complicated world that we're in.
I mean, it's scarily beautiful is the way I describe it. Now, a lot of digital companies are all about building the super app, right? Like, so, we all know in the world, if you look at China, you have WeChat.
Yep.
Now, WeChat works because you have a central authority that ultimately has the ability to make it centralized. Do you see super apps as a possibility of where we are in the world right now, whether it's in South Africa, Australia, or London, New York? Are we moving to a world where using wearables, where, with too much choice comes a level of paralysis? Are we moving to a place where things will become more centralized, in your opinion?
I'm actually surprised that, like, on some level, more of the Western mainstream apps haven't reached this point sooner. I mean, I know in the US there's an effort to break up these companies, but at the same time we see, for example, WhatsApp are already experimenting with mobile payments in Brazil and other markets. I think the challenge around this world is that we all have to share some commonality. We all have to be on some same system, because otherwise I'm navigating a different world to you. I'm seeing a different reality to you. My technology has to interact with your technology. So I think there has to eventually be some kind of uniformity. I don't know about whether these all-encompassing apps will emerge. I think that's perhaps the ambition of Elon Musk with X, and certainly Meta have got similar ambitions. But whether like Western governments allow that to happen is probably a different question. But I do know on a hardware side, we're going to have some mutual, commonly agreed upon languages, and because otherwise, I mean, we speak about the metaverse, right? And people talk about the metaverse as this like virtual world. I think about the metaverse as like overlaying the internet onto the physical world.
Yeah.
But we all have to see the same internet, right? If I'm putting a billboard up on this wall, ideally, no matter what hardware you're using, you're seeing the same billboard. So yeah, I think that's something that we all have to kind of conform to at some stage.
Or do I? Like right now, if I watch, let's say Sky Sports, there's a billboard on the TV screen for football.
Regionally customized.
Where you're watching it from Manchester, I'm watching it from London. We have different adverts.
Yeah.
Watching the same game. So there is some room for differentiation,
There's some benefits that, sure. In terms of utility of location and language and that kind of specificity, for sure. That's definitely beneficial.
So to end, Yusuf, tell me, paint a picture. If this was 10 years' time and we've normalized like AR, and I'm wearing a wearable.
It's not it's a definitive
in 10 years' time, we'll be back here. Back here. Let's say back here. I'm wearing my wearable. You're wearing your wearable.
We won't have to physically be here. We'll hologram each other to the other side.
I can't hug you. Or maybe I'll be wearing sensors. That means I have the feeling of giving a hug, right?
Just smell me straight off the plane.
Yeah, but I want you to paint a picture to the banks of tomorrow. The people that we're talking to are building the banks of tomorrow. They're building the banks of 2035. Right? And so in 2035, what will our financial experience look like?
It will be entirely camera first. People will look at things to pay for them. They will look at things to get more information about them. The entire retail experience will move in much more in an experiential direction. The idea of going to a store and simply trying on a pair of clothing will have gone away. Augmented reality will effectively have allowed me to augment that outfit onto me and see what it looks like in shoes. Returns policies will have dropped significantly because that friction with retail has got better and better. Experiential is going to be everything. And these kinds of experiential businesses we're already starting to see. You're already starting to see on the high street board games emerge for people to come play board games. We're going to see more and more in that direction. I think banks are going to have to offer a lot more than just a transaction. They're going to really have to be highly involved community builders, and they've got to focus on which communities they're building. Are they building the startup community, right? We see banks in the US that predominantly focus on that. It's going to, just like how content is becoming more niche, I think banking is going to become more niche.
Fascinating. Yusuf Omar, thank you so much for your time.
Thank you.